Yes.
Bogdanov, he did it.
He bought.
He went all in.
Dump it.
Hello guys, welcome again to another BTC video. I have an interesting one for you, so stick around till the end of the video to see where Bitcoin might take us. So guys, Bitcoin actually is doing something very similar to 2014. I've talked about this before in my previous videos, so I urge you to go check it out if you want. With that being said, we're going to jump straight to the charts. So on the left side of the chart, we have the Bitcoin 2014 bull run, or at least the end of the bull run. And on the right side, we have the 2021 bull run that we are currently in. Both of them are the weekly charts. And both of them are very, very, very similar to each other, both in price action, in structure, and believe it or not, even the indicators are doing the same thing. So whether you want to believe that this is a repeat of this potential bull trap right here is up to you, but my job is to try to show you the signs and to show you the data, and then you can decide for yourself. With that being said, let's go to the charts straight away, and first let's analyze the structure of 2014 and see how similar it is to 2021. So in 2014 you had your drop, you had your consolidation like a U shape basically, and then you had your bull trap and basically dump. And this bull trap, by the way, also happened in some type of consolidation phase after the drop came. And in 2021 we have a drop, we have a similar consolidation phase where basically you are holding support, and then after that you pumped, and then you're potentially forming a bull trap with a similar consolidation phase on the weekly time frame. So again, structure wise, these look the same, especially these U patterns that Bitcoin loves to do. So this is one thing that we need to pay attention to. Price action, same. Another thing that is the same, which is only similar between these two runs only, you can go check the charts if you want yourself, is the 18 and 30 EMA crossings. So if you don't know this, you can go watch my previous videos, but I really love to use the 18 and 30 EMA on the weekly chart because they do signal potential bull traps, bull ends, bull market ends, bull market starts, a lot of things, especially when you combine them with the weekly chart or the monthly chart. Is up to you to see, but they're very good indicators. And you can see it's the only time in history where BTC kind of did the same thing, where it basically dumped, consolidated, these were about to cross. When these cross, you can see what happens. It's basically the end of the run, but no, they faked out, they pumped, they made a bull trap, and they dumped. And right now the BTC did the same thing. So it dumped, it consolidated, these were about to cross, and if they crossed, this was basically the end, right? But no, we pumped, and now we're kind of forming the same bull trap as we are doing here, in my personal opinion. Again, not financial advice, I'm just showing you the charts. And this is the one and only time Bitcoin has ever done that. It didn't do that in 2017 or 11 or 19 or anywhere else. This is the only point in time that Bitcoin did the same exact thing with these two indicators that are basically branded by me and my mentor. I don't think anyone uses the 18 and 30, but yeah. Another thing that was similar was this. So let's go more, because there's more similarities between this, and I'm going to show you. The next similarity that I found between the two charts is the consolidation phase itself. So the consolidation here was between March and May. Okay, so March, April, May, right? So 3 months. And right here, the consolidation was from May to July. So again, May, June, July. 3 months here of consolidation, 3 months here of consolidation. Coincidence? I don't know. It's up to you to decide. I'm just showing you the facts and the charts. That's it. So the consolidation phase is similar in price action, which is like this, like a U. So like a U. And the time of the consolidation is the same. So around 3 months in both. Of course, we can give or take a few days because price action is different, right? We are at 49, where we were here was around like $50 or $400, right? So yeah, let's continue because there's more. The pump itself actually is so similar in percentage to this, like eerily similar, and I'm gonna show you. So the pump here was from here to around this area right here, right? So 72% pump. Now if you go to Bitcoin and you do the same thing on the charts, right? You take your ruler and you take it to the upside, so you get the same exact thing. Actually, you can, I did it by mistake, sorry. So yeah, here you go. So 71.5 pump from that last low, whereas here you had your 72.61 pump to the upside. So 72% pump, 72% pump. So there's a 1% difference between each. Again, different price action, but it's so eerily the same. Very close percentages in pumps as well, and the Fibonacci ratios probably will be the same. So this is something to note as well. So now we have structure the same, price action the same, percentage of the bull trap the same. We have as well the 18 and 30 EMA fake out here and here the same. What's more interesting is every other indicator as well is the same, and I'm gonna show you how these indicators are so weird and playing out the same in the same way. So first we're gonna go with the MACD indicator, right? So the MACD was crossed bearish during the consolidation phase, and then it pumped, did a fake out and dumped. Similar to 2021, MACD was crossing bearish, pumped, it did a fake out right here. Okay, so pumped right here, a fake out, and now potentially this might roll over similar to here, because here we pumped and we did a fake out right here, okay, at this area where we almost crossed, right, or we kind of like looked like we're gonna curve, and then no, the MACD just continued up and then basically crossed bearish. And here it's more scary because the MACD has no basically the MACD has no room between the two lines, between the MACD line and the signal line. So here you had room, so here it was more scary. People weren't very sure. Here you're kind of more lean, or you lean kind of to the bearish bias more than the bullish bias. So yeah, similar MACD. RSI, again, same thing. Once you pumped, you tried to go above that 70 region on the RSI. So you went to like 73 and then dumped and then couldn't go above it anymore. And here we did the same thing. So we went to that 77 region and then dumped below because we couldn't hold it basically when we reached that high. Okay, so RSI similar. What else? Squeeze indicator, similar as well. So during the consolidation, your squeeze was red, turning dark green, dark red, sorry, and pumping to the upside. And here during your consolidation, your squeeze was red, turning dark green, and pumping to the upside. So similar thing. The one thing to note though, also, which is very similar between these two, is right here when the squeeze was about to turn from dark green to, sorry, from dark red, which is here, to dark green or to green. We had our first huge correction right here on the weekly. And similar to this, when the squeeze was about to turn from red to green, which is, you can see here, from dark red to green, we had our first also a huge correction at the green area as well. So 20% drop basically. And another thing to note, which is also very similar other than these indicators, so you started your correction in this week and it took you 1 to 3 weeks to finish the correction and then to basically start pumping again. And here it took you 1, 2, 3 weeks again to finish the correction and start pumping again. And when you pumped, by the way, you did kind of wick and try to basically go for that high again, the high at 686, but you reached at least a 668 basically. And if you do the Fibonacci and you can compare it here, you'll probably know that that high is going to be around 51.6k, the 51.6k region. And we can do that if you want. We can just take our fib extension and we can take it from the all-time high right here. I'm going to try to make it as accurate as possible because it's very hard, especially with these small percentages and these the small price action. So yeah, we reached at least let's see, so at least above the 0.786 basically with that second run, right? And if we do that here on our current dump that we had, again, take your fib and then put it on that high right here around, no, this is too much, so right there, yeah, 52.9, perfect. and then we take it to this area right here, our dump, and we extend. So that fib around the 80 fib, which is in my opinion above 70, the 0.786, so around this area, so you get that 51k region, which is the golden pocket as well from the bigger structure that we have, the 0.618. So again, very similar in nature. You have 3 weeks of correction, 3 weeks of correction after you started pumping. Now, coincidence, again, is up to you to decide whether it is or it isn't. Now, the next thing that I want to talk about is the the stochastic itself. So the stochastic, as you can see, it pumps, goes to that overbought region, and then basically goes below the 80 region, which basically signals low momentum, tries to bullishly cross again, tries to climb up again over the 80, and basically just fails. And here we're doing exactly the same thing right now. We went to the overbought region and then dumped below the 80, which signals low momentum. And now we're trying to bullishly cross again, in my opinion, to try to go for the 80 region one more time, which is going to create a similar scenario to what happened here in 2014 as well. So squeeze indicator the same, stochastic the same, RSI the same, MACD is the same. The only difference between this and this is here we weren't showing any kind of divergences, whereas here we are showing bearish divergences on a lot of time frames, especially the monthly time frame with volume. By the way, volume is the thing that is scary for me, because we are kind of going up but the volume is kind of going down. So this is kind of a bearish divergence, which kind of shows you that basically the price action is moving up, but it's just moving up. There's no actual volume behind the move, and that's where you need to be scared, in my personal opinion. Of course, it's not gonna take a day or two, probably a week or two, and you'll probably see the outcome, and you'll probably see if 2014 is similar to 2021 or not. In my opinion, it's very similar, and I think it's gonna happen again, because as the great Gan said, Gan is the guy who gave us the Gan fan. If anyone here is a TA or trades using Gan methodology, as the great Gan said, history is bound to repeat itself, and if you can find those points of confluence where history does repeat itself, then you can predict the future and be very rich. So yeah, I'm eyeing that 50 to 51.6k region for that potential wick on the weekly before bloody weeks to come, in my personal opinion. So yeah, we went to the charts, we saw the price action, we saw the indicators, everything looks similar from the EMAs, from the squeeze, the RSI, everything. And if you want to do a small experiment and try to figure out when this dump might happen, this huge wick or this huge dump that happened here on the weekly on 11th of August, which is right there during the dark green region of the squeeze indicator, my best guess is we can use our ruler to basically kind of see how many days it took. So 84 days for this dump to occur. And if you go here and you do the same thing, so from here basically, right, 84 days, so let's see where that takes us. So right there, this is your 84 day mark. It's around 18th of October. 18th of October. So you can believe that by the 18th of October or by the end of the October, if Bitcoin is still here, then this is repeating itself. And you have been warned not once, not twice, that many times. And I'm warning not to make you scared. I'm warning to protect your capital, because this could go to the moon. But if you do some kind of capital protection here, at least you can go to the moon safely rather than eat this bear market right here in front of you. Last thing to talk about, which is so similar as well, is if the indicators that I use, which basically kind of signal bear market starts, and these are complicated indicators, so I urge you to go watch the YouTube video that I uploaded that is talking about these indicators, by the way. But to make it just simple for everybody, you have this color formation, which is always bullish: red, purple, blue, and orange. Orange needs to stay below sea level, so below the yellow level right here. Once the blue flips green, touches these two on the top, so the red and the purple, and then at the same time price action dips, touches the orange one over there, right? And at the same time the orange starts to climb up above the sea level, right? That's where your bear market, or that's the warning signal, like, yo, be careful, we're gonna enter a bear market soon, but wait a little bit, because we're gonna have a fake pump to the upside, a bull trap, and then we're gonna enter it later. And on the right side, 2021, we did the same thing. So bullish formation throughout the run: red, purple, blue, orange, orange below sea level. Now blue touches the purple and the red and turns green. Price action at the same time drops, touches that orange line, which is starting to rise above sea level. And as the orange line starts to rise above sea level, as you can see in both, right, you start to make that fake local top. So you rise and you start making that. Once it rises, you start to making this bull trap in both scenarios. And as this rises, the blue one, which is here, basically starts moving towards the orange. So blue one starts moving towards the orange, and then the red one and the purple one start to act as resistance for the price. You can see that we did have a wick to the upside, which I believe is going to be this wick at 51.6 basically. And then after this happens, you basically just start to close under the red and the purple in the upcoming weeks. So 1, 2, 3, 4, and then these start to cross more. And then when these two cross, so the orange and the blue, and the orange starts to turn yellow, and you start to closing below all of these EMAs and DMAs and TMAs. So that's just game over. Okay, right now blue and orange are really close to touching, super close to touching, and basically we are getting rejected from that DMA, right? The DMA is coming in TMA, which is coming in around 49.6. So expect the wick like this as well to play out, and then next week will probably be below the TMA as well, and that will be your signal like, yo, be careful, because when this drop happens, it's gonna be too late already. So yeah, I hope you did enjoy this video. Please like, please share, please subscribe. I really want to try to do my best to post as much as I can for you. I'm not a negative guy. I'm not a bad guy. I'm just here to try to educate and try to analyze. I'm not here to bash anyone. I'm not here to bash the bulls and tell them that they're not going to have their bull run again. I'm just trying to help general, normal, unbiased people to save their capital, to protect their capital, and to manage and basically invest with risk management strategy. Stay in the market. No one's saying leave the market, but just do it smart. Be smart in your investment. Don't go all in, and then basically when you eat a 30K drop again, you get depressed and anxious and basically start crying or something. Okay, that's all I want to say on that subject. Like, share, subscribe. If you want to follow me on Twitter, I do post a lot of this information on Twitter. Link in the description below. And if you want to inquire about my private paid Discord, again, you can message me on my private Telegram. Link in the description below as well. I really hope you enjoy your upcoming weeks, and I will see you again next time.